Home Depot's Q3 earnings were helped by barbecue sales. Now, the company is also raising its forecast as bad weather increases demand for home improvement products. Let's bring in David Bellinger, analyst at Mizuho Securities. Thanks very much for joining us. Can you remind us, why would bad weather help Home Depot? Is this repairs, plywood and stuff after the storms in North Carolina, for example?
Hey, Andy, thanks for having me on. That's exactly right. So you had a lot of this hurricane prep activity, people going out and buying sandbags, fencing. That sort of shifts to recovery activity, cleanup activity, things like chainsaws, generators, things of that nature. So Home Depot specifically called out a $200 million sales benefit in the quarter directly from the hurricanes, and we're starting to see some of that bleed into Q4 as well. So should have an additional benefit going forward. But that to me, it's not necessarily just a one quarter issue. You could have years of rebuilding activity in these markets, depending on the severity of these storms, and everything that we've seen, they were pretty severe in nature.
Tell us about this declining sales. I didn't realize this, that Home Depot's comparable store sales have been dropping for nearly 2 years. Investors don't seem that worried.
Yeah, that's right. And this quarter, we look at U.S. same-store sales down just over 1% in the quarter. That was actually the best number in about 2 years. And a lot of this has to do with just the category. There was a lot of pull forward with all the stimulus dollars that went out there. Home Depot is doing comps north of 20% for a major $150 billion retailer. That's just unheard of. So it's taken a couple of years for all this to bleed off. But one big positive in this quarter, you saw trends improve sequentially. So they started off pretty weak, down about 4% in the month of August. We wound up exiting the quarter above plus 1%. The hurricanes helped with that, just better weather in general helped with that, warmer temperatures. But even if you pull that weather impact out of there, October was still positive. And that gives us more confidence that a true turn in the category is coming next year. And if you look at, call it a positive low single digit figure for 2025, there's a lot of earnings power attached to that. So investors have tried to get ahead of this, and then that's why you've seen the stock move up pretty sharply year to date.
Trade credit, this could be a big growth area for the company. What is it? It's extending credit to builders and contractors?
Great question. We've done a lot of work on this, and I think it's a very underappreciated piece of the Home Depot story. But it's essentially Home Depot financing product to larger remodelers, smaller scale home builders. So in the past, Home Depot's always had a credit card, a small line of credit. Maybe these guys were getting extended something like $5,000. That really just doesn't cut it. You might be able to put like 3 doors in a house for $5,000. What trade credit really does is it's allowing them to go after some of these really big, complex pros who need hundreds of thousands of dollars or millions of dollars in trade credit. And they had some great commentary on the call today, in our view, that there's a few hundred customers who are under this trade credit pilot program. It was really a capability that Home Depot bought as part of their SRS acquisition earlier in the year. They got this capability. They're starting to port it over to their core customers, but it's allowing them to get deeper into categories like roofing and siding and large scale lumber, things like that a real home builder or large remodeler needs. And that's really a new piece to the story. And as I mentioned, them doing $150 billion, $160 billion in annual revenues. I think trade credit is a big piece to get them closer to $200 billion. It'll be a multi-year lift, but it looks, at least in the early stages, it's trending pretty well right now.
And presumably they also make interest income off this stuff.
Very small, I believe. It's something like 30 to 60-day financing. If you don't pay within that time frame, you'll be penalized and pay some type of interest on top of that.
What about the competitive landscape? Does Home Depot have an advantage over Lowe's, for example?
In that respect, yes. So with the pro customer, that's where Home Depot's really resonated. About half of their sales are to the pro, and that's typically the small and medium-sized pro. This larger, complex pro is the new growth lever for them. Lowe's, the pro's only about a quarter of the business, and that really is more of this small scale, more local pro. Think about your local plumber, local electrician. Lowe's has done really well in that respect. I think they've got a lot of share to keep rolling up in that space, and nothing wrong with the Lowe's Pro. It's just a structurally different one, but they're both doing pretty well in that area of the market.
And Home Depot generally, does it grow in line with the economy, or can it achieve? I mean, it's a mature industry, I suppose, selling building products. Can you look for outsized growth over the long term from Home Depot?
Yeah, it's a story that's really been a GDP plus type growth rate as they wrap up a lot of market share. And Home Depot and Lowe's combined now have 40% plus of the home improvement category. That's where they're looking at this pro as a relatively new customer. But what's typically driven this business is home price appreciation. As you've got home prices moving up, consumers have the confidence to take on larger scale renovations, remodels. Rates have been a key inhibitor of all of this. We're all waiting for rates to come down. When they do, I think that'll spur a lot of activity, unlock a lot of activity. But that home price appreciation, I mean, you've got consumers sitting on a mountain of home equity, and it's just waiting to be unlocked. And as you get rates coming down, I think you will see that.